Hi, my name's Tom Groth, and I'm a tax attorney. Today I wanted to talk to you briefly about a question I get a lot from people when they find out what I do. And they say to me, "Hey Tom, what happens when I lose an audit? Is there something that I can do after that, or is that really practically the end of the line?" And the answer that I want to share with you is that no, it's not the end of the line. Um, if you've been audited and that frontline employee has decided to disallow some expenses or to count some items as income that you don't think were income, and you think you have a good basis for it, then it makes good sense to speak to an attorney once they've come out with their decision. And there's a few reasons for that. The first reason is that a lot of times it makes sense to have your CPA or a CPA or a tax preparer help you in an audit with a revenue agent from the IRS. And the reason for that is that the revenue agent is going to give them credibility. I mean, it's what they do for a living. They prepare returns. If they're the ones that prepared your return and they're willing to stand up for you and defend the deductions and the way everything is presented on your return, then that says a lot too. And in addition, sometimes as part of an audit, it makes sense for the person presenting the audit to the IRS frontline employee to prepare a pro forma return. So they find out that some things are wrong here in your original return, but maybe they find something else. Well, they prepare a return as how they would have prepared it, or how looking back on it now they should have prepared it, and they present that to the IRS. And it's really easy then for the IRS person to understand where you're coming from. And on top of that, then a CPA can advise you on the type of documentation you should have had on file to justify that expense. Whether or not you provided it to your tax preparer is not really relevant here, because a lot of times tax preparers are going to rely on the information you gave them. But if you have information to back it up, they can help you compile that and show that to the IRS. But when all of that fails, when an audit is over and the IRS is still not ceding on some of the issues, well, then maybe it's time to talk to an attorney, because here's what an attorney can do. First of all, and a CPA could do the first thing I'm going to say too. There's an administrative appeal after an audit's over. Sometimes it's good to have a fresh set of eyes, but yes, a CPA could certainly handle an administrative appeal. They're authorized to do so, because that's still representing you in front of the IRS. Now, after that appeal, if you even get the opportunity for that appeal, after that appeal, the IRS is going to either decide, IRS appeals is either going to decide they agree with you or they agree with the auditor, or maybe somewhere in between. But after that, they know, and you know, that, or you should know, that they're going to give you a letter that gives you 90 days to petition tax court. Now, that can help in the negotiation with the appeals person at the IRS to know that you are gearing up to maybe take this to tax court, and to have somebody making arguments in the same way that they would make them in tax court can be effective if everything else has failed. If backing up your expenses, if playing nice, if making everything really easy for the auditor to understand hasn't worked, then something's got to give. So it makes sense to have an attorney represent you in the initial appeal, but I think a CPA, very many CPAs and enrolled agent friends of mine, could certainly handle that, and just as well, if not better than me. But now, after that appeal is over, you face a question. Am I going to take this further? Am I going to remove this issue to tax court? Do I disagree with the IRS so much that I think that I'm right on the law and they're wrong? Because while a settlement officer at the IRS or an appeals officer at the IRS can consider your arguments, they're still going to hold the line on things that the IRS says are the way that the law should be interpreted. And sometimes it's possible the IRS is wrong. That's why we have the ability to go to tax court and to district court to contest their view on the way the tax code is, the way the regulations are, and everything in between. Sometimes maybe something's unconstitutional. Sometimes a state law issue is going to impact a tax issue. So there are a lot of things in play here. And again, it's good to have a fresh set of eyes. So now you get your 90-day letter that gives you 90 days to petition the tax court. Nobody can give you an extension at that time. The only time you're getting a do-over is, well, two ways. You're only getting a do-over two ways after that 90 days has passed. Either you are challenging the actual notice of deficiency, which means that they didn't deliver it properly, or it's not sufficient on its face, but that's a really low bar for the IRS to get over. And after that, you're going to have to pay pretty much the whole tax and bring a case in federal district court, actually sue for a refund. So that means you got to hand your money over to the IRS before you decide whether you owe it to them. And not everybody can do that. So you got 90 days to file in tax court. And in that period of time, though, you file. Now, you still have a chance to go back to appeals. You still have a chance to negotiate with an attorney at the IRS. First time you're able to actually speak to somebody whose specialty is tax law and not tax administration. So there are additional opportunities available, and there are only two types of people, two types of professionals that can take your case to tax court. There are tax attorneys, and there's something called a U.S. Oh no, I'm going to forget this. I'm sorry, guys. A U.S. tax court professional, something like that. There's actually a tax court bar that people who are not attorneys can take to get admitted to the tax court. It's really hard to pass, but there it is. So your options aren't as limited when you're dealing with the initial audit. But after that, you have to decide whether or not you're going to take it further. And if you're not sure, speak to an attorney and see what they say. Because most attorneys are not going to take a case that's not worth your time or their time. There's never an absolute chance of success, but that's for you to judge on the advice of your attorney. And no attorney should be giving you a percentage or telling you that it's a sure thing, because it never is. Otherwise, you wouldn't have gotten to that point, because the IRS certainly doesn't think that it's a sure thing for you. So just something to consider. And so I hope you found that information useful. And if you're looking to reach me, if you have any questions about this video, you can actually schedule a phone call with me right on my website, which is tom.tax. Or you can give me a call at 844-4TOM-TAX. Hey, thanks for tuning in. I'm going to be doing more of these, so stay tuned.